MD at Tata Metaliks joining us on the show right now. Sandeep, hi, good morning. Your pig iron segment has once again been very weak and your segmental result also has fallen by a solid 25%. Walk us through what exactly, managed to hurt your performance in the third quarter.
In fact, I thought it's the reverse. The pig iron performance has been a stellar performance. The overall profitability increase has been to the extent of, it's almost doubled compared to last quarter. We are at about 55 crores in terms of profit before tax compared to, say, 23 crores in quarter two. And this has been primarily led by the pig iron business. It's been a much better efficient operations. So improved fuel rate, improved coal injections, no shutdowns, and much more, I think, sales volumes. So all in all, it's the pig iron business which has led the show, and the ductile iron pipe has been a little, I would say, lower than last quarter. But I think on the whole, the performance has been very good.
Okay, I was just taking a look at the pig iron revenue as well because, the reason my colleague asked is that we understand that the revenues are down just about 4.5% to 386 crore rupees. But anyway, let's get a move on and talk about the DI pipe segment, and that's been seeing a strong couple of quarters. You've managed to churn out a profit with the segmental results. What really has been the driver of that, and what has hurt the revenue there?
Yeah, actually the profitability of the ductile iron business has always been very robust. In fact, if you look at the EBITDA margin, it's increased to 20% for the ductile iron pipe business. Even for the pig iron business, it has moved up to almost 10-11% compared to, say, 2% in last quarter. But specifically about the ductile iron business, the dispatches, the deliveries have been reasonable. I won't say it's been very exceptional or something. In fact, they have been slightly muted because there are issues of funding, as you know, in government projects, which starts impacting the EPC contractors and thereby to the ductile iron pipe players as well, like Tata Metaliks. We should have done, in fact, better than this. And I think there will be a little bit of a hang on quarter four as well.
Looking at your margin performance, and that has really held out well, what would you say has aided your margin performance? And can you hope to achieve the same numbers or even better your margin trajectory in the fourth quarter?
Yeah, I think the performance has been primarily led by a turnaround in the pig iron business. We've been having problems with our blast furnaces in the last 2 quarters, which I had spoken to earlier. I think this quarter has been very smooth. Our availabilities have improved, our yields have improved, the fuel rates have come down significantly. The furnace has performed very well, and it's been backed by the sales team. Despite a continuous slide in the prices in quarter 3, we have been able to sell 86,000 tons of sales of pig iron, which is better than what we have done. In fact, December was a record for last 2 years. So primarily it's the pig iron business which has turned around. It's almost 36 crores swing in EBITDA for I think the pig iron business. The DI pipe business continues to be smooth and stable, except that we would have wanted to do much more. So on the whole, the swing is mainly because of the pig iron.
What were your realizations for pig iron and DI in the quarter versus what we saw last year? And how do you see volume growth shaping up in both of these segments?
So the NRs, the net realizations have come down by almost 1,000 rupees per ton in both pig iron as well as the ductile iron pipe business. Well, there has the reduction in the raw material prices were a little more. I would say it's more like 1,200 to 1,500 rupees per ton. The slide was expected because as the raw material prices comes down, the finished goods prices also gets impacted. The prices have turned around for pig iron. I think you know it. The steel prices have also moved up. So right now there is a surge in sentiment in the pig iron business. How long it will stay is difficult to say. I think there may be some restocking which is going on. Fundamentally, if the demand has improved or not is a little difficult to say at this stage. But as far as the ductile iron pipes are concerned, demand is definitely there. It's the fund flow, it's the liquidity which has created a bit of I would say a slowdown in terms of deliveries. But on the whole, for quarter 4, we expect similar if not better performance.